Now, our next guest says now is the time to buy those stocks, even as the recovery starts to lose some steam. We're going to talk with Andy Kaplowitz from Barclays Capital, joining us right now in New York. Andy, thanks for joining us. Why now in construction and engineering stocks, even as we start to feel this recovery slow down? Why would you start buying those stocks at that point?
These stocks, thanks for having me, these stocks are classic late cycle plays. And when people start feeling like the recovery is entrenched, and I think the customers are starting to feel like the recovery is entrenched, that's when you start buying these names. They've lagged a little bit this year. I think it's an opportunity to buy.
But if you see a double dip, or if you're concerned about the expansion stopping, would that be a reason to sell them or not to make that move to buy them?
I think, if you're worried about a double dip, I think those worries have been reflected in the stocks. A lot of our stocks are off 20% over the last month or two. So I think the worries, the concerns are in the stocks, and we're starting to see more large projects go forward. So I think this is the time where there's some worry that's in the stocks, and there's good evidence of some large projects that could go forward over the next, let's say, 3 to 6 months.
What are the names that we're talking about here? What are the kinds of stocks that you're looking at?
Well, we favor names that are levered to large energy infrastructure projects. So our favorites are Fluor, McDermott, and CBI. And these projects, these companies do these large projects focused in LNG, in international petrochemical, refining, and upstream oil and gas.
Hey, Andy, just looking at the performance, I mean, these guys, some of them are doing okay this year or doing fairly well, but they've also had great 12-month runs here. Fluor Corporation's up 53% over the past 12 months. McDermott's up about 76%. Then you've got CBI is up more than 100%. Aren't you a little worried that they're getting a little heady here, and maybe a lot of the good expectations about the economy and the demand for their services is already kind of priced in here?
Carol, I think that's a good question, but if you go back to sort of that 05, 06 time frame, these stocks had rallied pretty hard during that time frame, and then they proceeded to go up 200, 300, 400% from there. So if we continue to have a slow but steady recovery in the energy infrastructure markets, you could see these stocks double or triple from here, and that's what I think investors should play for.
What about a name like Fluor? Their earnings, they saw nice earnings, and it was due in part to a rebound in commodity demand and higher oil prices. So there's a name that's actually tied, rather tightly to the commodity complex. Commodities have pulled back somewhat. So if commodities pull back, should you pull back a little bit on Fluor?
It's a good question. There's a sweet spot for where oil should be for project investment, and I think that sweet spot is now. WTI between 80 and 105, it would tend to not slow down the global economy, but it would also be a very good investable price for our large customers. So, I'm actually okay with oil prices pulling back a little bit. I think too high an oil price, you get too slow an economy, or you get too much inflation around these projects, and they don't go forward.
Are there companies that you specifically have concerned about, or should I say the companies that you do have concerns about, are those company-specific concerns? I'm looking at Shaw Group, for example. It seems to be among the group as far as international construction companies. Why are you worried about this one?
Well, Shaw has tended to have some execution issues over its time, but we think investors can look past these issues if they like the end markets. And I guess I would say this: we tend to prefer the energy infrastructure markets because they are based more in emerging markets. And if you look at power for a Shaw Group, it tends to be more focused in the U.S. market, and we think it'll be more of a choppy recovery in the U.S. market, a little bit lethargic. We do see power spending increasing, I think at a slower rate than the international oil and gas markets.
Andy, you talk about some of the energy exposure. McDermott International has a lot of revenues coming from the Middle East, a lot of it, in fact. I mean, with all the risk that we've seen in the Middle East, doesn't that make you a little nervous about that name?
So, Carol, we were in the Middle East a couple of months ago, and honestly, we were in Saudi Arabia, and they want to speed up investment in Saudi Arabia, not slow it down to help the average person in Saudi Arabia, especially their natural resource is oil. So we look for an improvement in spending in the Middle East, not the opposite. Now, if Saudi or one of the other countries like the UAE were to dissolve into something, unrest there, we'd all have problems. But I don't see that to be the case.
All right, Andy, we're going to leave it there. Andy Kaplowitz over at Barclays. Thanks so much for talking about the group. We appreciate it.
Thank you.